Hello, welcome back to my channel. This is Soji Forex. In this video, I want to show you a very profitable strategy that you can use in making profit from a bull and bear market. We'll be discussing on a trading strategy of divergence. So we are considering how do we make money from the financial market using divergence. Okay, and we have two major types of divergence. We have a bullish regular, we have a bearish regular, and we also have hidden divergence. But we'll be looking at a bullish and a bearish regular divergence in this video. Alright, so all you need to do is for you to install the setup on your chart. Okay, our setup, what we are using is the MACD. This is a special edition of the MACD that can help you to see the divergence in the market. This strategy is very profitable. Please do not skip any part of this video. All you need to do is stick to this video from the beginning to the end, as I will explain for you every step and everything you need to do in order to make profit from this strategy. Okay, so what is divergence? Divergence in the market simply means a disagreement between the price action and your indicator. It means that there is a disagreement between what the price is doing on the main chart and what your indicator is doing. When you are seeing such a thing, it means there is a divergence that is occurring in the market. We have various indicators that we can use to identify the divergence. You can use the stochastic, you can use the relative strength index, you can use the MACD, but especially we'll be using the MACD, which is the Moving Average Convergence Divergence, for us to spot every divergence in this market. And it is also very important to know that the higher the time frame, the stronger the signal of the divergence. The higher your time frame, the stronger the signal of your divergence. So let's try to identify some of these divergence from our main chart. Let's try to identify some of these divergence and see how they play out. Okay, this is M5 time frame. We're going to identify this divergence on various time frame, but let's begin with our 5 minutes time frame and see if we can spot any divergence. Remember, you have to find the trade in order to take the trade, and that is why we are looking for where we can find the divergence. Okay, we have one here already. If you look at this, you see that the main chart is making a lower low, and then look at our indicator, and then the indicator is making a high. The main chart is making a lower low, while the indicator is making a higher low or an equal low. So when you see this is a divergence, and then from there you see that the market bought to the upside. Here is another example. The market is making a higher high. And then you will see our indicator. The indicator is making a lower high. The market is making a higher high, but what the indicator is showing us is a different thing. It's making a low. while the main chart is making a high. So considering this, you see that there is a disagreement between that. And then when the indicator is making a high, a higher high, and then you realized that your indicator is making the opposite, we trade in the direction of our indicator. We trade in the direction of our indicator, which is what we are seeing here. We trade in it, and then you see that from there the market sold to the downside. Okay, let's identify another one here. Here is another one. It looks more like, see this bottom, and then from there, this is what we got on our indicator. You see it? The indicator is doing something different, and then straight up the market begins to buy from that level. Okay, now when we spot divergence, what do? We are still identifying our divergence. You see it here. The market was making a lower low, but the indicator is making a higher high, and from there you have the reversal. So this divergence helps us to identify reversal in the market before they occur. It gives us early signal. It helps us to forecast when the market is about to reverse. If we are in a buy trend, for example, if you are selling, immediately you spot this divergence, you should know that the market is about to change direction. Instead that you take partial or you close your trade. So it is simple, it is straightforward. Okay, here we are having another one. This thing is all over the market. It is all over the market. You can see it. It is making a higher high, but when we look at this place, it is making a lower high. So there is a disagreement, and then immediately that happens, the market will go in the direction of the indicator. We sold in the direction of the indicator. Okay, we can go on and on and on to identify this divergence in the market. They are everywhere. All you need to do is for you to wait. Here is another one making a higher high, and then here we have it. We have our lower low, and then the market is making a lower low. So these patterns keep happening, keep reoccurring. So you can take advantage of this market to get your entry. Okay, now how do we make our entry in this case? Now, because we spot a divergence does not mean it will dive into the market instantly. No, it doesn't play out immediately. It doesn't play out immediately. Here is another one making a higher high, and then look at this, it's making a low, and then you see that the market calm down. So how do we trade this? All you need to do, once you are spotted, you need to mark out your trend line. Mark out your trend line. Okay, or otherwise you have to wait for a break of structure. Let the market break structure. Look at it here. We have a break of structure from this point, and then immediately the structure was broken. You see that the market broke it. It came up, retested it, and then went down. So you need to do what? Wait for a break of structure. Once you have the break of the trend line, you take your trade, and then your profit is at the previous high. Okay, let's go through the ones we have marked before. Look at this. Then you have your trend line somewhere here like this. You have your trend line carefully marked out, and then you see it, there is a break of that trend line, and then a retest, and then we sold. Okay, so these things is very pretty simple. That is it. You put your trend line, you wait. You see it break the trend line, went up, retested it, and then begins to go. So it is a very profitable strategy that you can use, and you make cool money. You see it break the trend line, and then it moves in that direction. The same thing is applicable here. After this break, after this break, it break out, break the structure, and then came back, and then retested it and went in that direction. So this is how we trade using divergence. Okay, here is another one. After the break of the trend line, and then the market went in that direction. So all you need to do is identify this pattern and then watch them play out to your favor in this market. So let me show you the setup. Okay, what we are using is the MACD. Our first EMA is 3, slow EMA is 10, MACD SMA is 16, our main star is 3 pixels, the signal line is 1 pixel. Then you click on done. I believe you are getting value from this video, and if you are getting value from this video, please do not forget to like, to subscribe, and then share with your friends and loved ones. That is the only support you are giving to this group. Please like our video, comment, share, and then subscribe to this channel. Please subscribe to our channel. Here is another example, and then from there we have the break of structure, and then you see the market begins to move down. So we have come to the end of this video. Thank you. Cheers.